Hello from Trend Signal for a review of the data and events of the week beginning the 6th of November. Just a reminder regarding USA Canadian time difference. They invoke their daylight saving shift, as they call it. Having had a week of 4-hour difference between here and the US, we're now back to our regular 5-hour difference. So a regular end of day close now at 10 p.m. Overnight markets, a bit subdued, really, leading to a flat opening here in Europe on that Monday morning. Almost all markets, it seems, equities, bonds, commodities, FX, all look to be at the same level as they were Friday afternoon. Markets last week, equities dribbling higher is a good description. Even the FTSE joined the party and closed at a record high on Friday, but certainly the Dow, S&P, DAX all continue to make new highs. Interesting sort of targets reached. Apple tacked on another 2.5%, 2.6% Friday as optimism grows about the iPhone X and certainly Apple Watch sales apparently, although they won't be getting any of my money, at least not for the time being, a very expensive product. But Apple, as headlines in some papers suggesting that is now nearing that $1 trillion market cap, which is extraordinary. It actually touched 900 billion, but it is nearing it. That is true. Amazon continues its steep ascent, up another 1.6%, which is 16% higher since the results were announced, 10 days ago. And that makes Jeff Bezos the richest man in the world, at least for now. Currencies, well, it's pretty quiet, really, certainly on the dollar front. The dollar index edged a little bit higher, remaining at a 4-month high. The announcement that Jerome Powell will be the next Fed chair did little to the markets, really, as was expected, really. Sterling had a surprisingly torrid time Thursday, despite the first rate hike in more than 10 years. I think the announcement by the MPC was not a surprise, albeit perhaps a little more dovish than some expected, but the reaction was quite extreme. I think the idea that a rate rise, a one-off rate rise, surely is nonsense. But I think that's what some economists are suggesting, that this is a one-off rate rise. One and done was one of the headlines. But Brexit and a slowing economy were rolled out as the reasons, of course. But I think the Bank of England is actually a little more hawkish than that. And I read that the Deputy Governor on Friday made it very clear that another 1 or 2 rate rises would be necessary. Trouble is, I guess, that not many in the city are listening for now. Precious metals, base metals, all under a little bit of pressure with a strong dollar. Gold down $3 last week. Oil continues to confound some of the skeptics. Brent oil up $1.65, US or WTI oil up $1.73. So all tacking on even more gains, which will be giving OPEC more encouragement to extend these production cuts. But as one economist quoted recently, there's nothing like higher prices for stopping higher prices. The trouble is that demand is pretty inelastic, but production, well, then you have to look at what the shale oil producers in the US will be doing. I think rubbing their hands together was probably a good explanation of what they'll be up to, as the sector, I think, continues to produce oil in record quantities. So let's have a look at the data and events this week. Generally, the data was positive. Last week's non-farm payroll data appeared to miss, but that wasn't the whole story. The previous 2 months were revised up by about 90,000. So you can see that the headline number, whilst missed, the actual overall picture was better than most forecasts. And unemployment, that hit 4.1% in the US, which is a 17-year low. So data and events this week, a quiet week for the calendar, as usual in the week after non-farm payroll. We jumped firstly to Tuesday in the Reserve Bank of Australia statement, their rate announcement, almost certain to keep rates on the hold at 1.5%. We then have Mario Draghi, chairman of the European Central Bank, talking at some banking supervision forum in Frankfurt. As always, he can say things that have an effect on the market, so people will be watching that. Yellen is speaking in the evening. Janet Yellen, the chairperson of the Federal Reserve, some award for ethics in government, apparently. I can't believe there are many candidates for that type of award these days. Wednesday, crude oil inventories, the weekly crude oil inventories, looking for another drawdown. It's, pretty non-stop really, but that's what OPEC's looking to achieve, is a rebalancing in the supply-demand equation. Royal Reserve Bank of New Zealand on Wednesday, late in the evening. I think after the flux created by recent elections, Kiwi has continued to fall. We expect no change in rates, but I think the likelihood is that the next rate rise will be up, but not yet. Thursday, Brexit talks. It's not actually listed here, but the Brexit talks continued between Barnier and Davis. Barnier on behalf of the EU and David Davis representing the UK government. I guess we just want to hear whether Mr. Barnier is going to tell us that talks have progressed or are deadlocked, as was the case last time. It's been talked about until we got very bored of it, really. Friday, it is actually a bank holiday in the United States, but the point is that markets are open. Banks are shut, but it's Veterans Day. But as I said, the markets, stock markets, futures markets, foreign exchange markets will all be open. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.